Welcome.
Hello, everyone. I am Diane Donnelly, and I am with the Donnelly Group of Keller Williams Flagship of Maryland. And I am the owner of the Donnelly Group real estate team here in Annapolis. And you are watching a video today in a series that we have done called Facts Not Fears. And it was born from conversations that I had with clients, with friends, with relatives about how confusing everything is out there during COVID. So we put this together. Oh, my phone is ringing. I don't know what happened. Are you guys there? Yeah, everybody's there. That was weird. My phone rang, so it went, my computer went blank. That was weird. But anyway, Mary, I'll give you a call back in a little while if you're watching. But anyway, today is going to be a fun call. We are going to be talking with Christina Kopchinski. She is a loan officer with the Bank of Glen Burnie. And we're going to talk about construction permanent loans. So hello, Christina. How are you today?
Good. Thank you for having me.
Absolutely. Thanks for being here. And if you would, just tell us who you are, what you do, and just a little bit about you.
Sure. So I'm Christina Kopchinski. I've been with the Bank of Glen Burnie for almost 10 years. I'm a mortgage lender with the bank, and that encompasses a lot of different types of lending, lots of different loans. So we have a big lending team. We do commercial loans as well as, consumer loans, but I specialize on the mortgage side of things.
Fantastic. So you do FHA, you do VA, you do construction permanent loans, you do jumbo, you do normal, regular, non-jumbo loans, non-conforming loans, all of that, right?
Not necessarily. So we're a portfolio lender, which means that, we service our loans for the life of them. We do not do FHA and VA because we are a portfolio lender. We house all of our paper, but we do up to 95% loan to value with private mortgage insurance. We do jumbos and we do construction perms.
Fantastic. And today we're going to talk about construction permanent loans. So for those people who know what a construction permanent loan is, they are in some way related to building a home. So people that haven't, can you just tell us what a construction permanent loan or a construction perm loan is?
So the construction perm is a hybrid product that allows you to finance the construction of your soon-to-be primary residence. And then at the end of the construction phase, instead of having to do a new loan or refinance, you can essentially flow it right into your fixed rate 30-year term, 15-year term if you choose loan without the cost and the headache of a refinance.
Right. So you're doing it all in one loan instead of in two loans.
Correct. So the first portion of your loan is your construction phase, where it's interest only. It gives you the flexibility to take draws as you move along. And then once that UNO, that use and occupancy permit, has been issued and it becomes your home that you're living in, that is when it will convert to the term fixed rate portion. Okay.
I'll ask you a little bit more in detail about some of those things. Is a lot loan separate from a construction permanent loan? So a buyer is going to come to you. They're going to say, I've got great news. Diane helped me find a lot. I fell in love. I bought it. From that point to you, how does that work? The lot loan financing and the construction permanent loan?
So if you came to the bank with a lot that you already own, we would essentially do the construction perm on that lot, and your initial advance would be to pay off your current lot balance if there was one. So the lot portion becomes the startup balance on your construction, and then your draws would go from there for the actual building of the home. If you came to us and you wanted to buy a lot, you did not already own it, then we could do the same type of loan, the construction perm, only the acquisition of the lot would be the part of the loan itself.
Okay. So somebody has, I'm going to give a scenario where people already have the loan or not the loan, they have the lot and they have a mortgage balance on it. They come to you, their balance is $100,000. They say, I want to roll this in because I'm going to start construction. And they're going to take the lot loan balance, and say it's $150,000. And you're going to take that 150, roll it into a construction perm loan. Is that considered a first draw or no?
So the initial advance is not your first draw necessarily. The initial advance is typically for the payoff of the balance of the lot or for the acquisition of the lot. Your first draw would not take place until you've begun the actual construction and we've had an inspection for that draw.
Okay, so for people that don't know what a draw is, you when you come to the table with the interest of doing a construction permanent loan, there's certain documents that you would need. For example, knowing what the full scope of the construction would be, right?
Correct.
Talk to us a little bit about that. So when they come to you and they want to do a construction permanent loan, what documentation should they have already done before even meeting you?
So the way that we handle it, when we start the actual process for the construction perm, we need the drawings and specs for the project. We need the construction budget, and those items are provided to an appraiser, and that appraiser will provide a value as an as completed project. So definitely would need the construction budget, the drawings, the blueprints to actually get the project started.
Okay, and all of that is provided by the builder of choice for the buyer.
Correct.
Okay, all right. So in thinking it through, somebody says, okay, I want to buy a home. I'm getting ready to do one of these very shortly. Andrea is working with the buyer, so we're going to be doing one. And I did one when I bought a lot a long time ago. So it's a refresher for me. And it's very different than a normal loan. So just to walk through it, I buy the loan. Let's assume it's that process. I bought the lot. I come to an agent, or I'm in relationship with an agent, say, okay, I'm ready to start building. They either have a builder or we can recommend a builder to them. They decide, okay, I want to buy the Rehoboth property. I mean, the Rehoboth model. And that's the model that they're going to build. Then they're going to say, I need a scope of work. And I need to say, okay, from foundation or grading to putting the roof on and being done. Within that, there may be 5 draws or money that finally gets spent on to the vendors who are building it, right? They don't want to wait 6 months to be paid for a foundation. So you break it up into draws, a draw schedule, right?
Absolutely correct. We do 4 draw schedules, but we're very flexible. So obviously, as you know, things change. So if we have a draw schedule, we get the process started, then sometimes a buyer will want to upgrade their flooring or appliances or make changes to the floor plan. So any changes, throughout the process, we're very flexible on the draw schedule. We can add a draw if we need to. Sometimes they'll go through, a group of work that would have encompassed 2 draws. So we'll make that into 1. So it's a very flexible process.
Okay. And usually is the first draw, would that be your grading plans, all the permits and all of that stuff? Does that get incorporated into a draw?
Correct. So some buyers like to pay for the permits and so forth out of pocket, but in most cases you don't have to. Typically the value would support, enough to include those costs as part of the loan. So first draw is relatively basic. It's going to be your permits, your grading, any tear down if it was, an existing structure on the property. So your first draw is not going to require a lot of actual construction to have been done.
Right. And then that gets paid to the next people. And then the rest of the scope of work gets picked up from that point on.
Exactly.
And
typically we'll work with the builder. Some builders, they have their own way of doing things in their own process. So some builders, they want a certain amount in each particular draw. And again, as long as it makes sense, we're flexible.
That's really good, because sometimes if you're working with a bank that has really rigid plans, and because you're a lender, and I know because I've been in real estate for 30 years, things don't always go exactly as planned. And sometimes things get out of budget or things get skewed where things have to be shifted a little bit. So the fact that you're working with a lender who has some flexibility in their guidelines is pretty important on this kind of a program.
Yes, for construction loans, you have to be flexible because they never go as planned.
Yes, never go as planned.
No.
What are the interest rates on this type of a loan?
So as of today, of course, they could change, but our construction rates are the same as our 30-year, 15-year, or 20-year terms, depending on which way that the borrower would want to go. As of today, for the 30-year, it would be 3.5. For our construction loans, we do charge a 1% fee. That is a construction fee. So if you were to do one today for 30 years, it would be at 3.5 up to 500,000 with 1 point. Our jumbos over 500 are currently priced for 30 years at 4%. And for the construction, you would have that 1% fee.
I can't believe we're talking about interest rates in 3.5%.
I know, it's unbelievable. And there's, as a portfolio lender, we're conservative, but there's, rates out there that are just unbelievable.
Yeah, I keep talking to sellers and they say, should I wait till COVID is done? I'm like, take advantage of buyers who are able to buy because of the interest rates being 3.5. Because if you wait till they're 4, I remember when we were in 8, 9, and they hired to us 16%. We're talking about 3.5%. So don't wait till COVID is over and rates go back up to 4.5%, 5.5%, because you're taking a whole bunch of people out of the buying market. So take advantage when the playing field is as low as it is and level, take advantage of that now. Right?
This is the time to do it because they're not going to last.
No, it will not last.
No.
So I heard you say earlier, and I remembered that from when I did this 15 years ago, about the interest only. Where does that come into play?
So for the first, what we call 12 months, although again, if it needs to be extended or shortened, it could be, but our initial construction period is going to be a 12-month draw schedule. That's interest only. So the way that we would do it is during that 12-month period, there would be 4 draws. You pay interest only on the balance that you carry. So initially, obviously, your payment's going to be lower based on the smaller balance. But as the project moves forward, then your balance increases and your interest only payments go, up accordingly. So that 12-month construction phase, while you're most likely still paying for housing elsewhere, we're giving you that interest only ability. You can pay principal if you chose to, but we're only going to bill you for the interest only. And then once that construction is complete and you convert to your term fixed, at that point, then you would pay your principal and interest payments.
Okay. So walking through this a little bit, we have the lot, we turn it over to you because we're going to turn it into a construction permanent loan. So let's say it's 150,000. We start there, 150,000. And my first draw is, and I have no idea what the realistic numbers are. Let's say it's 50,000. My first draw is 50. So now when I make a payment, it's now going to be on 200,000 in that example.
Correct. Yes.
Build on, your construction is moving nicely. There's no hiccups. Everything is beautiful. That's another 50,000. Now you're paying off the drywall guys, the electricians and all of that stuff. That's 50,000 more. Now you're going to pay on interest only on 250. Draw 3 comes, it's another 100,000 and your house is looking beautiful. Now you have $350,000 that you're paying on, right?
Correct.
Okay. So hopefully everybody was able to follow that piece. And then the end comes, you get signed off, you get a use and occupancy. You're ready to go, move into your home. You go to closing now, and now you're switching. What? Am I right?
There's no second closing.
No. Oh, I had that wrong. So when you go originally, you're doing it based on the final number.
Correct.
400,000.
Yes. So there's no second closing. That's the beauty of it.
Okay. That is so. I'm glad that you said that because I would have left here with bad information, a bad reminder, but I was thinking that you go to closing at the end, not in the beginning.
Nope, you settle in the beginning.
Okay.
So that's the other beautiful part of this, especially in today's market with today's rates. Obviously today we're seeing rates in the 3s. A year from now, when the project is complete, who knows where rates would be? But as the construction perm product provides, you're locked in at today's rate. So you're not having to worry about what rates could be a year from now when you're ready to move in.
That's huge for right now.
Yes, it is, especially right now.
Let's say the reverse happened. It's 3.5 today. It takes a long time to build the house. It didn't go as planned. Hiccups along the way. Beyond 12 months, the interest rates go from 3.5 today to 5.5 over this period of time. They just refinance it later. Is that how it would work, or is there something different?
So if you locked in today at 3.5 and rates went, are you saying if they went down?
They went up.
So you would have your 3.5 locked for your loan.
Oh, right. So what happens? Let's say that somebody does it, it's 5.5 and the rates go down. What happens?
So that's a little
Here's the
different.
example, right.
And I can only speak for my institution because I don't believe that all banks offer this. But the way that we work at the Bank of Glen Burnie is if our published rate goes down and you have, a higher rate, we give you the option without a refinance, without underwriting. There's literally no underwriting. We give you the option to buy down your rate with a 1% fee. And that's for any borrower at any point in their loan. So let's say you locked in at, now this is going to get absurd, but let's say you locked in at 3.5 today, and then next year your project is complete, or 5 years from now, rates go down to 2.5. As a borrower, we're not going to make you refinance as long as you don't want cash out. If you're doing just a rate and term, we allow you to do that simply by signing a change in terms agreement with a 1% fee. So no application, no underwriting, no appraisal, nothing.
That's wonderful.
It is. It's a good way to retain our borrowers.
Yeah, because then you're not paying all the transfer recordation, all of that kind of, all those fees again in a refinance.
Correct. There's no financials needed. There's no appraisal. It takes me a day to prepare it. So it's something that you're not waiting 2 months to go to settlement for. It's immediate. That's
awesome.
It is awesome.
Really
I agree. I was shocked when I found out about this, but it does help us retain our borrowers. And sometimes we're not always, our rate may not be the lowest that they could get out there, but sometimes just the headache of the refi, it's easier just to stay where you're at and pay that fee and reduce your rate.
And it's an insurance policy, isn't it?
Yes, absolutely.
Having that as an option.
Yes.
Okay. And then I wanted to do a couple of quick fire questions. Okay.
Sure.
All right. Can you do a construction permanent loan on an investment property?
We do not at the Bank of Glen Burnie. There may be lenders out there, but no, we do not offer that at the Bank of Glen Burnie.
Okay. What is the minimum down payment when you're doing a construction permanent loan?
So that's the other beautiful part of this product. We require if you come to us and you already own the lot, essentially, you can do this project with no additional out-of-pocket cost if the final subject to completion appraisal comes in high enough. If you were to come to me and you have a lot you'd like to purchase and then build on, we would require 20% down on that lot.
Okay, so the lot's 100,000, you give 20%, nothing about after repair value or any of that kind of stuff.
That is correct. You put your 20% down on the lot purchase only, and then your construction in good chance could be 100% financed based on what the subject to completion appraised value came in at.
Okay, that's really good too. Okay.
It is.
And I think you've answered this, but I'm going to ask it again just to clarify or to confirm. What is the benefit of a construction perm versus a standalone construction loan?
Standalone construction loan requires that refinance of the project at the end of it. So the construction perm, number one, gives you the rate lock for the life of the loan. And again, with the uncertainty, you just don't know where rates could be in a year. So it locks that rate in for you. It saves you the cost of a refinance at the end of the project. And it gives you a little bit more flexibility.
Okay. Saving money.
Absolutely. It's all about saving money.
Headache, time, and money. Okay. How long does the borrowers have to complete the home? I heard 12 months, but understand that there's some flexibility in that.
Absolutely. So our initial, the standard product is 12 months. There are things that happen. Obviously, permits could be held up. Things happen. So if you come to your 12-month period and your construction is not complete, we will extend that out for you, typically on 3-month periods at no cost. And you would remain in your interest only period at that time.
Okay. Until completion. Okay.
Yes.
Is there a maximum or minimum loan amount?
None.
That's incredible.
Yeah, it's an amazing project. It's really our niche in the community.
Well, I can tell you know what you're talking about.
Thank you.
Can you tell I didn't?
No, you did actually. I was impressed with how much you knew.
I was trying to remember back 15 years. It was a long time. It might even have been 20 years ago that I did one, a long time ago, and forgot a lot of it.
I was thinking she's done her research.
Thank you. I appreciate that. That's good to hear.
Yes.
Is there anything that I'm not asking that I should be asking, or should we review anything that maybe a first-time construction perm person may need to know?
Have your builder build in a contingency. Don't be shy about it. Put a nice little 10 to 20% buffer in there, because like we've said, there's always unforeseen things that come up. And it also gives you a little bit more room for upgrades if you chose to. So that would be my recommendation, is just don't necessarily go in with the lowest budget, build in that buffer. And then if you don't use it, it's there for you. You don't lose it.
Right. And you're not paying on that, right? You're not paying,
Exactly.
if you don't use that as additional draw. If you padded it and said, okay, this draw is going to be 50,000, it is 40, you're not paying on 50, you're paying on the 40. So why not add that in as a buffer, right?
Exactly right. And that's my only suggestion is better safe than sorry. Build it in the front. And then if you don't use it, no harm done.
Wonderful. All right. Any other tips or tricks or anything that somebody should pay attention to as they navigate that part?
Do your research on your builder, make sure he's reputable, check their, references. Other than that, no, it's a really good way to get into your dream home with a very minimal cost.
Yeah. And I want to underscore that, working with your builder, that the cheapest isn't always the best. Sometimes they're the cheapest for a reason. And online reviews or testimonials, they're important. And don't just pick a builder because they had a floor plan that you liked that was, 30% cheaper than someone else. There's a reason that happens. But go with somebody with a strong reputation, because this is your home.
Exactly. I cannot stress that enough. Absolutely.
Yeah. And I'm sure that you've seen nightmare stories.
Yeah, that's why you just definitely want to do your research, take your time, and know your builder.
Yeah, well, that's really sound advice. And is there any questions that anybody has that they put in the chat box?
No questions in chat or on Facebook.
Okay. All right. Well, Christina, I can't thank you enough. Thank you. This was really great information. I loved it. I hope everybody else loves it too. And if somebody is watching or is going to be watching here shortly, this is how you can get a hold of Christina. Christina, the best way for you is via phone, text, email, call?
Email is best, but call anytime.
Okay. And I think you've got the information here. And also, if somebody finds this information helpful and knows somebody who is looking to build a home, please share this with them, share it on your wall, and get the word out. We appreciate it. Thank you for tuning in. Christina, thank you. Angie, thank you for helping us to navigate through the Zoom call. And we will see you guys soon.
Thank you.
Thanks, Christina. Take care.
Thank you.
Bye-bye.
You too. Bye-bye.